Ladies and gentlemen, Kim here. Welcome to the market update. Hope you guys had a good day today, had a good week trading this week. Well, market is at 350 on the S&P 500 Spider ETF. As you can see here, for the first time in the history of stock market, Spider just printed $350.58. or you're gonna call it a point. It's we've seen some incredible run last couple weeks here, and you know, it's been amazing how just how quickly, just for me to even witness you know, what this market is capable of this year, but just how quickly the sentiment changed from bearish to bullish so quickly, so fast. Right? It just feels like it was yesterday that I was analyzing. This was back in April 3rd. It's cut off here, but you know, I was analyzing back in when it was like 240s here, you know, talking about certain levels, you know, potentially this being a possible, you know, bottom, which we talked about how we've been looking at a lot of, you know, long-term macro charts at the time. We talked about how, you know, once the market gets above 280, 300 and stays above it, there will be a bullish territory. It felt like, you know, when I was doing the analysis, and even maybe some of you guys watched that video and you kind of thought that, well, didn't it feel like it might have been like it's going to be potentially forever? It might never get there. You know what I mean? It felt like, how long is that going to take? Are we really going to get up there? Or are we going to come back down and then do something like that, right? And just as quickly, just a couple months, several months later, we're at new all-time high. I mean, I think I have to say that I think most people didn't see this coming, and that's not something you should be surprised about. It's that's how this market operates, right? If you've been in this market only just for a couple years or several years, or you're new, know that you want to be going where, you know what I mean? You don't want to follow where everybody else is going. And this market really taught us that lesson this year. You know what I mean? And at the same time, you don't want to let your emotion, the fear that has been around since March lows, you don't want that to hinder you when the market starts to get into an uptrend. And you know, I've been navigating this market with you guys pretty much every single day since late March, and you know, all the videos are there, and how we navigated, how we looked through all these subtle differences, technical, you know, and one of the things that I've actually focused most, I mean, almost every single time, was this entire move since March lows until here. I didn't let the fundamentals get in the way. I'm not saying you should completely ignore it, but I didn't let it get in the way. I didn't let the economical data to get in the way either, right? Doesn't mean you should completely dispute that or ignore it. I'm saying at this particular circumstance, in this climate that we're in since March lows, I didn't let that get to me, right? In my analysis, I purely navigated this market. Well, I put most weight on. Doesn't mean I don't listen to it. Doesn't mean I don't pay attention to the fundamentals or economicals, but the driving force of this move was mostly technicals and psychological, right? And those two things we've been covering in the last several months, right? So it's really easy to be tainted by your own emotions. You know what I mean? It's easy to be provoked with fear that has been going around. And once you made up your mind that there's no way with this kind of economy, with this kind of fundamentals, there's no way this market is going to make V-shaped recovery. I'm talking stock market. This stock market is not going to make, a lot of people are saying and thinking at the time, this market is going to all of a sudden after 35 corrections like this and go all the way back, make V-shaped recovery in the same year. We're talking majority retail trade, 90% or more. There's no way. Not with these fundamentals, not with this psychological, or economical data that's been pouring out. It's been horrendous. It's probably the worst situation ever, right? And yet, we were at the quote-unquote worst situation ever, yet we're just witnessing the fastest, most furious recovery ever recorded in the history of stock market. It's crazy how that works, right? Well, as I promised on the video last night, that we're going to be looking at monthly charts today. But before we get into it, actually let's go to that 65-minute chart real quick and do a real quick analysis here, kind of follow up with what we've been talking about last couple of weeks here. So, and you can see this thing is crazy. Now we're witnessing my 65-minute chart oscillator, right, is elevated for the entire month of August, right? More than 30 days now if you count here, about 30 days, exactly 30 days I think, if you count the late July. For 30 days, we have not seen my oscillator coming back down to the oversold area. And market continues to march higher. And we talked about that yesterday. We did see that cross down. We talked about how that's not a huge signal anymore. Because we've seen it many, many times. When the oscillator is elevated like this market is extremely adamant to give anything for the bears. We also talked about yesterday that, price is pretty much been moving sideways while the oscillator has been pulling back. Well, that's pretty much what this market is, creating space, right? Creating space so it can move higher, right? Correct in the short term of things. We're talking micro term, right? Just correcting through time while the oscillator takes a breather a little bit because it hit the overbought. So let the oscillator reset, and it does not even come all the way back down to this low. It stopped short right here. And last time we saw something like that here. Look at that. And now, I don't know how long this thing is going to do this now. Something like that. So now, because we just saw the cross here. So now that's a support. And we got the second support right here. And the price is continuing to. There's that little pennant pattern there, breaking out, continue to move higher. And we want to continue to give benefit of the doubt to the buyers. And I've been talking about last couple of weeks how you should be managing your portfolio at these levels, right? I don't have time to go talk about that today, but there are videos out there that talk about how you should be preparing and how you should be, managing risk in this type of environment. We talked about, if you've been following my video every single day, you are aware of that. Let's go to back down the daily chart here. So quickly, I want to give you a few resistance levels here. So what I want to do is I want to draw from this peak. See that? That peak, this peak connects this peak, and that's next level of resistance. And then I want to connect with this peak right? So I want to connect with this peak right here back in January 2018, and obviously the February 20 this year, and then that's right here. So let's confirm that, make sure they're all lined up correctly, right? There. Let's do that. Right? So you know how you saw how I did it? Here and here, right? That's gonna be next current resistance. This does not mean just because I have this resistance drawn, now all of a sudden we're gonna hit that and it's gonna do. That's not what it means, because you could have done the same thing back in where? Back in 2018 and 19, right here. This one, this one, this one, this one, this one, this one. Well, we didn't. You can actually, there's a video back in 2019, July and October and September. You can even probably check what I was saying back in 2019, July and August and September, October. This doesn't mean that it's going to come all the way back down. This doesn't mean it's going to come all the way back down. But what did it do? We did see that pullback, but those pullback gave you some volatility before resuming to the upside that lasted for like 4 or 5 months there, right? So same concept here. Just because we're gonna be near this resistance, and this is something that I've been talking about this entire time, last 4 months, that let's not get into a dramatic conclusion, right? Every time when there's some kind of decline, you know, we talked about that back in early June, talk about it in May and April. Let's not get into a dramatic conclusion yet. And obviously we've seen these levels acting in support. But so we're getting into near that these are potential level of support or resistance, I mean. And this does not mean that it must act as resistance. But given the fact that we've came long way. Let's see how far we came from the March lows here. 60%. We just made 60% move since what? April, May, June, July, August. So in 5 months, we made 60% move. And that's crazy because the market usually move sometimes 15, 20% a year. But we had some crazy fluctuation this year, 35%, and then goes up 60%. But anyway, so when you see that market moving that fast, that much, and we're getting to that resistance, right? I think it's gonna slow it down. We're gonna see some corrections in that vicinity. And I don't want you to be like too precise with these lines. Just because it gets slightly above it doesn't mean that's a breakout, right? It could have some up and down shenanigans here, but I can see that the market is going to start to slow down in that vicinity, 350, 360 area before start pulling back. Do you know that if this thing comes back down to retest the all-time, let's say it went to like 356 and then did it, that's only 5% correction. 5% correction is nothing after 60% run. If it comes down, decided it's going to hit my midterm moving average on a daily, that's about 8%. If it decided that it's going to come down to, let's see, 320, that's about 10%. 320, that's about 10%. And some of those like 5 to 10% correction is not a huge deal after a move, 60% move like this. But I don't believe that this market is gonna come back down to the March lows. We talked about that yesterday, why it's not gonna come back down all the way to March lows. I think the worst case scenario, let's say if we do see this thing go up and start coming back down, the worst, we're talking the worst case scenario, right? I think the worst case scenario will be, you know, hitting my long-term moving averages. But the thing about these long-term moving averages, the market decides it's going to go up and start pulling back, but it doesn't pull right away. It starts to like really like consolidate for a while. Let's say it does that. And while that thing moving sideways, what's going to happen is my long-term moving average is going to continue to like move higher. And then that thing pulls back to retest. That will be just 317 or 320 potentially, which is going to be only about 8-9% correction. This is the reason why, just because the market is extremely extended, you don't want to be aggressively shorting. Because there might be some fast decline, but I feel like more than likely that thing is gonna make it very, very difficult to short this. It could stay sideways for a very long time. We just learned this looking at hourly chart. Look at all these moves. It was already extended, but we go up sideways. You go up sideways, go up sideways. And then we kind of move sideways here, right, for a couple of days or so. Before moving higher, we made another sideways move. And we're talking, 65-minute chart. But when you look at daily, can you imagine this thing going sideways for days and weeks and potentially even months, right? That's what's very, very difficult to try to short this. So let's check out the monthly chart real quick. All right, so looking at this monthly chart here, let's adjust this. Right there, we talked about this line chart, right? How perfectly it lined up, right? We were never, looking at the line chart, you can see that we're never in a bear market. We never even breached the lower low. When you look at a line chart, we have a perfect higher lows and higher highs. What does that mean? We're in an uptrend, right? Despite the fact that how crazy that move was in March, looking at the monthly line chart, we still have uptrend intact. Look, this is looking at monthly now. We're looking at a primary term uptrend now. Primary, long-term uptrend. This is what's very, very important, that you also understand long-term of things, not just short-term, right? Because short-term, you're going to get very, very what? Emotional. You're always going to feel like something worse is going to happen. Just think about what happened in 2015 and 16. A lot of people are calling for 60s, right? I tweeted out today that a lot of people have been calling for a megaphone pattern. Oh, megaphone pattern is actually a bullish pattern. Looking at things in longer term here, as you can see, right? Monthly perspective, looking at this monthly chart, all these megaphone pattern is actually bullish. I don't know why everybody's always thinking that it's bearish. It was like that in 2015 is bullish. 2011 was also bullish. Well, was this time different? No, this time wasn't different, right? In 2020, it's also bullish, looking at things long term of things. So looking at the monthly here, I have to say, when the market gets into a steep decline like we saw in March, right? And then makes all-time high afterwards, let's just do a little quick, back testing here real quick. So we can say that this is pretty big, that's 2011 move. That was about 20% correction right here. I think that was 20. Yeah, I think that was 20, right? So we see a 20% correction, right? And then market makes a new all-time highs right here. We initially did see a pullback. I don't know, that might have been 10% correction or something like that. But what we didn't see is that, okay, let's count this too also. So this is a pullback, right? And then market makes all-time high, right? What we don't see is this thing coming all the way down, getting into a downtrend, right? Here, same thing here. We got a steep decline correction, and market makes all-time high on a monthly basis right here, right? We did inevitably saw a pullback, and that pullback seems to be lasted about 2 months, 1 month, and then we see a reversal next month, but month or 2 months there. But what we don't see is this thing coming all the way down, retesting the lows, or getting into a bear market, right? We did see a pullback, but when you look at things in the long term of things, it was bullish, right? Same thing here in 2015 and 16. What was the biggest major headlines in 2015 and 16? What are these quote-unquote billionaires, experts were saying on TV? Global financial market meltdown. That's what they're saying in 2016 and 17. Most people are bearish. So what happened? After it cleared the, right, all-time high level, looking at the long term, you see that lower wick here. So there were some monthly fluctuations, but looking at things in the long term, what did they do? They kept going higher. Or you can even look at it this way then. Vertical or the horizontal resistance, we initially made all-time high. We pull back for a month or two, right? Very shallow pullback. What we're not seeing is this thing pulling all the way back down to the lows or even getting into a bear market. What it does is it comes and pulls back a little bit, maybe even retest the prior resistance, and you know what happened in 2017, right? So now we are here in 2020. You can see that we're making all-time highs here, right? So it may pull back. So what I'm saying is the forecast is, because I just looked at 2010, 2011, 2012, 2016. So forecast is for 2020 is we may grind a little higher, potentially pull back, maybe pull back to this pivot right here, prior resistance as potentially new support, and then moves higher. And this pullback process could take a month or 2 months, because again, we're looking at monthly chart, maybe 3 months. Nobody knows. Or we come down to like 2016, we come down and retest this level, which will be like 325, 330, right? Again, this process could be what? Several months, maybe 1 month, maybe 2 months, maybe 3 months. I don't know. And then potentially bounce. So what am I saying? I'm saying that there's a very, very low probability this thing is going to come all the way down, retest the March lows, even go and making a bear market. High, very, very high probability, right? It's going to either find support here and then go higher. Going to find support here and then go higher. That's what I'm saying. Let's continue here. Let's go to NASDAQ. So NASDAQ continues to make a move here, right? NASDAQ is performing unthinkable. I talk a lot about unthinkables. I think, you know, I talked about this before. Like what I said was this market is capable of doing the unthinkable. Look at Tesla, right? Everybody went out there on social media trying to understand, like, you know, they're all questioning each other. How could this be, right? How could Tesla be up this much, trying to rationalize? You cannot do that. Market is capable of doing the unthinkable. And I think on these indices, we've all witnessed the market is doing something unthinkable, right? Tesla definitely doing the unthinkable. You cannot put fundamentals. When a stock moving like that, like Tesla's moving, you cannot put fundamentals. You see what I'm saying? You can argue all day long why Tesla shouldn't be up here, up there. Your job should be, okay, how could I benefit from that move, right? Like, let's say, okay, so Tesla's gone. You can't chase it up there, but something else, right? For some other stocks. I'm not saying you should go and look for the jackpots like that. If you hit it, great. If you don't, that's fine. So your job shouldn't be arguing why NASDAQ should not be up here. Your job is accept the fact that NASDAQ is here and the S&P is here and trying to figure out how you can benefit from these moves. Instead of asking question, arguing against this move and getting mad that market shouldn't be up here and whining and blaming everyone else but yourself for missing out on the moves or losing money shorting or anything like that, right? Because I think the strategy you need to develop is how can I find entry point? How can I find exit point? Not how can I sound smart on Twitter? How can I make this reasonable? How can I make this argument? Like, you're not a lawyer telling everyone why NASDAQ shouldn't be up here, right? Because you ain't making any money off of that. So our job is, okay, if we see any kind of move like this again in the future, we won't for a very, very long time because that's a very, very rare occurrence. But let's say if we do see something like this again, I don't know, maybe 5 years from now, who knows, right? How could I have done differently next time so I can actually profit from a move rather than going against it and arguing why this is all bull crap and this is all rigged and manipulated, and the QE and Federal Reserve, that's all because of them, is all becoming this way, and just being bitter about it. Let's go to monthly. Well, monthly looks pretty crazy, but I've told you guys before, I have reasons. I know when you look at this, it's like you're gonna be like, okay, that right there, that looks a lot like 1999 before the great crash, right? The dot-com bubble crash. Like I said, I don't have time to get into it, but I have reasons to believe that we're not in a 1999 crash scenario. And this is analysis I've done for my members. It takes hours for me to explain everything, but I have reasons to believe that we're not. It is crazy. Again, I told you this. Market is capable of doing something unthinkable. So for this, I mean, you can draw any of these lines right now, and it just blew right through it, right? Blew right through it. And so if you look at this, the same thing here. We've seen some steep decline. I mean, right now, this is 2008 and 9. Again, chart is a lot of times skewed. Okay, okay. Let's go to log scale. So it makes more sense to look at a log scale, right? When you're looking at this kind of chart, so you can see this is 2008 and 2009, right? So it looks more like it when you go to log scale. And then that was a 2011 correction, 2010, 2011, 12 correction. We got 2015 and 16 correction there. But you can see, you can see that that's all-time high. That's all-time high. You can see right here, that's all-time. Yeah, that's all-time high. That's all-time high. And that's all-time high. That's all-time high right there. So what we're seeing right now is, if you look at things long-term of things, when the stock get into, right? When the stock get into a, or the index, we see a steep pullback and then makes a new all-time high. Looking at things long-term of things, it's a bullish signal. You can see that in 2000, this is, you guys remember what I said in, I think it was yesterday, and I mentioned it yesterday, and I mentioned it like in a couple of the weekend videos, is that when the stock is a steep decline, and then when it gets back up to make new all-time highs, there has never been in the history of stock market where that thing come right back down and got into bear market. Here, let me prove that statement here real quick. Even you can see that this is 1999 and this is 2008. What we see is, what happened? What happened? All right. So what we see is there is that move where we see that big run, and then it initially crashes quite a bit, right? I mean, this is a big move. It was, here, I wanna see how much of a move that was, how much was pullback that was. Look at that. That's a 50%. This is what a lot of times bears are arguing, right? Bears are arguing that, hey, look at it in 2000, man, we did see that 50% big drawdown, and then we initially did bounce, and then that thing crashed. Only thing what they don't understand is, you can see here, we did see 50% drawdown, and we initially did bounce, but what is that one crucial information that this setup doesn't have? It never made new all-time high. That's what I was saying. S&P just made all-time high. Well, not just, well, this, yeah, S&P 500 has been making new all-time highs. NASDAQ made new all-time high month ago. Or was it a couple months ago? No, this is a month ago. Let's see, 2-3 months ago, it already did. So you can see here, we see that 50% correction, and we initially do see that what a lot of people like to call the bear market rally, and it makes what? The lower high. Lower high. We do not go back up and make new all-time highs and then that thing crashes. No. year. Same thing in 2007. We see that move. We see that correction. This is what a lot of people are calling this as a bear market rally. Does this go up and make new all-time highs and then crashes? No. It makes what? Lower high. So you see how we do not have that lower highs and lower lows right now. You see what I'm saying? If this thing was going to crash, or if this was going to be a real bear market, we would have never made all-time high. It would have stopped short somewhere here and then would have came down like this and would make what? Lower high. We do not have a lower high. We have higher lows and higher highs. We do not have lower high, right? Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. What is the definition of an uptrend? Higher lows and higher highs. What is the definition of downtrend? Lower highs and lower lows. Lower high. Lower high. Higher low. Higher highs. Does that make sense? Right? Even if like the NASDAQ decided it's going to come down to retest my midterm moving average on the daily, that's only 10% correction. If decided it's going to come down to maybe the all-time, I don't think it's going to. But let's say NASDAQ does some kind of crazy shenanigan, correction comes, and it's going to come down, retest that. I think a lot of people want to look for that. Market is not going to give it to them because a lot of people love to see something like that right now. This thing coming back down to the retest of prior resistance. If that happens, that will be a gift. But I think 10% at max. If we do see a correction, 12, 13, 10% will be max. And please, like, some of you guys are just sometimes like, people on Twitter and YouTube. I get it. You know what I'm saying? You're behind your phone. Like, if you met me in real person, you'll never say certain things you will say just on YouTube comment, on Twitter comment. You'll never say certain things to my face. I guarantee you will not say certain things if you met me in a real life. You will not say some of those things. So what I'm saying is, I say that we're gonna find support at 10, 12%, and if we do like 15%, you'd be like, he said 12, yes, I didn't see this one coming. Nobody did either. Warren Buffett didn't see it coming. Nobody saw this coming. Nobody. If anyone they claim to saw that coming, they've been calling crash for years. I didn't see it coming. But at the same time, I told you never to chase up here. Never. Don't ever chase up here. Was I buying up here? No. I was buying down here, here, and here. So I got some cushion as on the way down. And then I bought more here. Now all those things are going up with me, right? Though I closed out, a lot of my extended longs last couple of weeks. And it's funny how just some people's attitude, and I get it, it's online, man. You anonymously say whatever's in your head, right? It's cool. But just, you know what I mean? Like, because I think if you have that kind of attitude, I don't think these information will be helpful to you if you don't take it seriously. Nobody knows where the market is going to go. I do my best to analyze and forecast. I do my best, but I'm just a man. I will make a lot of wrong calls, man. But the what you need to understand is you look at me last several years, though. You look at me last several years. I've been doing YouTube videos since 2016, I believe. And I had my blog since 2013. So if you've been following me for the last several years, and if you say that, K. Kim he does make wrong calls, but he is overall, you know, makes more right calls than wrong calls, right? Because obviously nobody can make the right calls every single time, right? And I've been long since 2016 lows. I became a long-term investor, 2016 lows, started accumulating equities, right? And I've always bought every single dips. Does not mean my account didn't go through drawbacks, because I actually saw this coming. You guys remember that back in 2018, right here? I was actually even buying VIX calls, a lot of them at the point. And then I saw these bottom. I didn't see this coming. I didn't see this coming. But what I did do was I was buying these lows. I did not close out a single share of my longs when I saw this thing coming down pretty hard. But I did call this bottom. And now we're back here 350. So what you have to understand is am I consistent? Is K Kim consistent with his approach? Does he go through some kind of shenanigan emotional call outs where, oh, the market is going to have like 500 melt up, it's going to go to 400, like, you know what I'm saying? Oh, the market is going to be a great depression, 1920. Like, do I have that kind of dramatic conclusion about the market? And there's some people who change dramatic conclusion quickly, right? One day is 1929, one day is 400. You know what I'm saying? Like, there are a lot of crazy people out there just saying crazy things. Consistency, right? An overall market approach that is sound, right? I think if you look at it like that, you know, because I was buying quite a bit at these lows. And I was accumulating for every single day since 240s, every day. All right, my members know I was accumulating every single day. And like April, it provided me good level to get into index fund. I never really got into index fund until April. I started getting the index fund, and I'm on index fund right now on everything, on all the indices. We're talking S&P, NASDAQ, semiconductor, Dow, Russell, banks. But I'm more weighted on the S&P semi and the NASDAQ. And so this is the reason why if NASDAQ keeps going higher like this, I'm totally cool, man. It's totally great. I did close out my Apple a couple weeks ago. And I'm okay with that because I do have an index fund on the Qs that accumulated back in April, you know, April and May. And so, and I do have Google that I've been holding since I think 2018 or so. And I have not closed any of that. So I'm holding full on Google. So I mean, there's a lot that it goes with, just, you know, managing your portfolio, you know, and understanding how to rotate funds, know which one to hold, which one to close out, and when to be aggressive and when to, you know, lighten up. So basically what I do is when there's fear, and you know, because I mean, there's a long-term analysis that I've done for you guys for free videos. You can go check in late March, you know, the market guide, the COVID-19 survival guide, right? And so what I like to do is I like to buy when there's fear in the market, and then I like to sell when there's complacency, when there's greed, right? That's kind of how I like to. Doesn't mean I'm not in cash right now. I'm still very much long. But there are certain stocks that just went up like crazy amount, like Lowe's, Square, Apple. I've completely closed out those positions with gains. But I still hold many other longs. And some of those stocks that I tweeted out today, that they're including like Berkshire, I got FedEx, MasterCard, Visa. Those are all accumulated in April, May. Disney is another one. And I'm holding all of those, you know, today. Anyway, let's continue here. Let's go to Diamond. So diamond is eating away on this gap, right? And I think that's what giving it a little bit more push, because diamond continues to push here, and diamond has not yet put in all-time highs. I think it's only about 3% away. Yeah, 3% away to all-time high. So diamond is really, really catching up here. Let's go to monthly chart. So you see here, look at this. You can see here, right? There's that, what it looks like a megaphone pattern, and there's a megaphone pattern here. So what can we learn about the megaphone pattern when we look at diamond? Well, we do go up here, and we see some pullbacks on that resistance. We saw it here and here. And so this thing looks like coming back up here, right? Coming back up here, and then potentially we see some pullbacks. And then maybe move higher. Kind of like this. Go up, pull back, go up, pull back, go, right? Go up, pull back, go up, pull back, go, right? Okay, so maybe we get up here, go up, pull back, go up, pull back, go. I kind of think that that's what's going to happen on the S&P, NASDAQ, and over market. We're going to see these some up and down, sideways, and market is going to make things a little bit hectic for a couple months, I think, before resuming to the upside. Let's go, continue here, Russell 2000. So Russell 2000 was lagging heavily and catching up here. -6 year to date. We're only about less than 10% away from the all-time high. We still got this gap needs to be filled. So you see how Russell 2000 is lagging. And basically the market is waiting for the Dow to fill that gap. What if the market decided it's going to wait for the Russell 2000 to go off and fill this gap? We're talking another weeks and maybe a month this market can be elevated. Just NASDAQ and S&P just hanging around, waiting until the Russell 2000 get up here. So it's another piece of puzzle for Russell 2000 as I look at Russell 2000 and the bank sector. We're talking financial sector, XLF. Like they still got, if they decide they're going to start to move, this market can be propped up. So it's extremely, extremely difficult to try to make a living, survive in this market shorting. Let's go to gold here. As you guys know, this is kind of what I mean. I mean, I have a certain way I approach this market. I like to buy things when it's not too crowded, when it's not too extended, when it doesn't get a lot of attention, when there's still fear. And then when this thing starts going vertical, and now everybody likes to talk about it, everybody's talking about it as being part of it, and now we start to hear these major mainstream publications start talking about gold. This is where I got out, right here. I'm all out of gold. And even then, we did see pullback, but we're not seeing this thing just completely tanking either. It's, you know what I'm saying? I mean, who knows how long this thing could do this before going higher? Because we remember this. We did that. That's correcting through time before that thing just went straight up, right? That's what I mean. See, that's the danger of shorting, because it's very, very difficult to make move on these short-term pullbacks. So that thing moves sideways for weeks, month or 2 months looks like, and then we saw breakout. What if this thing does that for 2 months? What if the market index, in the equity market, indices do that, do something like this, and then make another rally? You see, this is a reason why it's so difficult trying to short that. Because if the market is here, let's just say S&P is here, and it's going to do this for 2 months, and then just go up like that, is that a possibility? Yes, because we're still in an uptrend. Pullback is also a possibility, but consolidation, correcting through time is also a possibility before doing that. So I'm all out of gold. I have not added any more longs at this point, and I'm not going to, but it looks like we have a midterm moving average here, and then that's been acting as pretty strong support. So, I mean, you see what I'm saying? Like, I'm still bullish in gold. I still want to give benefit of doubt on the gold, but I don't have any longs on gold anymore. Does that make sense? So that's why it's like one thing to, just start arguing about why gold is still bullish, why this and that. But this totally different question. Well, would you go long here? What would you do with your long position? Where would you enter? Where would you exit? See, that's the most important question you should be answering yourself, not arguing why gold is still bullish or why gold is bearish. What you should be asking is, okay, I'm kind of long right now, and should I continue to hold, or should I close out some, or should I close out everything, or should I buy more? See, that is the most important question that nobody's asking on social media. Let's go to silver. Same thing. I mean, silver, think about like silver just made since the March low, 158%. That's a big move. And though I am bullish on silver, I do believe that silver, it's going to go after, some of these all-time high levels. I really do. But after this kind of move, I'm kind of wondering, okay, I'm not gotta be. I don't ever, you don't hear me say there gotta be a pullback. Mark my words, man, this thing is gonna come down. It's gonna crash because I know so. You don't ever hear me talk this way, right? Because I don't know. None of us do, truly. You can speculate and you can place your bet on that. I won't be, I won't be like I won't be like shorting this, heavily, like crazy amount here. No, like you could short maybe a little bit here, maybe hoping to capture a little bit of pullback because I mean silver is kind of extended, but nothing crazy. But the real question is, well, okay, are you long on silver? No. I'm all out of my silver actually at the top here, near the top. I was actually accumulating here before the move. And that's how I like to approach this market. And I had to go through up and down. Doesn't mean it was a cakewalk. I started actually accumulating silver. I believe I started accumulating here. And then I had to go through this drawdown. And then I bought here, here, and here. And then I went through this drawdown, which is COVID. And then I bought more here. So what was I doing? Positioning myself, building portfolio around silver. And then when silver actually did this, that's when I closed. You see what I'm saying? There was a lot of waiting. I must have been waiting for like a couple years, looks like. 2018, 19, 20. But all the move happened, right? In just several months, couple months. Long waiting, right? Taking care of my position, and then my harvest time came. And if you want to ride it full, that's what you're gonna require, because you're trying to time it perfectly, like you want to get in and perfectly. What's gonna happen is all those times in 2018, 19, 20, you go trying to go long, get stopped out, go long, stopped out, go long, stopped out, go long, stopped out, and you know what happens? You're like, you know what? I'm sick and tired of this thing. I don't want to trade silver ever again, because you get emotionally hurt. Right? I don't want to trade this thing ever. You get angry about it. So you say, you know what? I'm sick and tired of this. I'm going to go find something else. I'm going to go start chasing Tesla and Apple and Amazon. And the next thing you know, that silver's up here. So which is better? Go long, stop that. Go long, stop that. Go long, stop that. Go long, stop that. F this, man. I'm moving on. Or you build your position over time. You go through some up and downs. Stick with your system. And then finally the payday comes, right? GDX. Same thing, same concept here. I'm all out of GDX also. Let's go to Bitcoin. I'm still long Bitcoin, right? I got long somewhere up here, and looks like we came and filled this gap. So let's get rid of that. So right now, what's going on is this Bitcoin is trying to cultivate higher low here, right? So we got higher high, and we got the low. So what we don't know is, are we going to bounce from here, and this going to become higher low, or is this market gonna come back down? Here, let's do this. And retest the gap area one more time. And then potentially, let's see if that becomes some kind of a support. Let's do that. Let's say that's support level, right? That's here and here. This thing's gonna come down, maybe hit that support, right? And then go up. Or sometimes, you know, what this market can do is, you know what, I'm gonna make things a little bit more trickier because, you know, everybody's looking at this support level. So what it's gonna do is come down, get below that level. I think that would be the worst case scenario, and fill this gap and then get up. That's also a possibility. But even if this can come all the way down to $10 per share, right? If things comes down $10 per share and then bounces, we can still categorize this higher low. Why? Because that low is still higher than this low. So when I get into trade, I'm always looking at every single possible scenario. Is there a chance that this can come all the way down to here and then some doing shenanigan? Of course, anything is possible. Like I said, I'm just a man. I do not know exactly where the market is going. I'll do my best guess, best educated guess, right? You know, pulling all the resources that I've learned since I've been trading since 2009. But it's all educated, sophisticated guess. It's just a guess because none of us can see the future. See, but that's what people don't realize is none of us can see the future. Only problem is when somebody's very adamant in their ways and they won't change their view of the market when the market, its sentiment changes. And that's kind of what we saw on the S&P. I think once the S&P, you know, if you thought that maybe April and May was difficult to go long, then I think at this point in June, again, you can go back check in my video on June 11 and June 30th. I think you ought to be bullish at that point here. I think that was kind of a full confirmation because we also just talked about that here. You know, I acknowledge the fact that this is bullish territory. This was again video back in April 3rd. So April 3rd, I've acknowledged the fact that, you know, this is going to be, once the market reclaims 304 and stays above it, that's a bullish territory. That's what I was saying. So you can see that's okay. So this is 300 right here, right? So that's a 300 level, right? Like I said, 300, bullish territory, right? So okay, you're too scared to go long in April, fine. Maybe even May, you're scared, that's fine. But then finally this can get up above 300 right here. But you've learned never to chase. You learn never to chase. I always say don't ever chase. Don't ever chase. So you didn't chase this. You faithfully waited it. And then it came down to retest 300. And you're looking at my analysis. I talked about this as potentially a great support. Why? Why was there potentially great support? Well, first of all, prior resistance, new support. Second, I got my midterm moving average. It's been on the money. I mean, it has a pretty impressive resume. Came down, retested, right? My long-term moving average acted as resistance prior to it, and then now acting as support. Not only that, we got the rising pivot. I've covered all of this in June video. So if you bought, so you were too scared in April and May, so you wanted to wait, you want to have a little bit more confirmation. So you bought at 300 at June lows. You're doing really well. S&P's moved 50 points since then. So if you bought stocks and indices, maybe even bought some call options on the S&P, expiring January or December, you're doing really well. You didn't have to perfectly call bottom here. And you should have changed your view. Let's say you couldn't understand it. You couldn't understand March, you couldn't understand April, you couldn't understand May. Well, rightly so, it's been very, very difficult. I mean, that looked like it's gonna be, either retesting the lows or maybe the bear market rally that we talked about, right? 2009, 08. That bear market rally halfway and then boom, tankage, right? Real panic bear market. So y'all didn't understand, that's fine. Like you're scared, that's fine. But here though, we also talked about this, the subtle higher high right here. So if you've gone long right here, right, to June lows, you're doing well. You're doing well. So let's say if you bought June lows, what should you be doing? What you should be doing is you start to close out some of your long, especially the exotics. Exotics meaning call options, right? Triple shares. You can hold some double shares, but if they're extended, if you had a double shares on the NASDAQ, I had everything on the NASDAQ. I had an index fund, triple shares, double shares, and call options. I close out all of them. Calls gone, triple share gone, double share gone on the NASDAQ. But I still hold double shares on the S&P today. I closed half though, last week I believe. I had triple shares on the S&P also, which I bought actually at the lows. So let's say you bought it here. What do you do up here? As we're getting extended, as we're getting near the all-time, what do you do here? You start to close out some of those longs. Obviously, you should be out of exotics already. Calls, triple shares, and maybe half of double shares. If you got into index fund, that's great because that's a long term. You're gonna hold at least several years. So you hold for full. Stocks, something like Apple, gone. Something like Square, gone. Something like Lowe's, gone. You close them out. You take profits on those. You can always hold some. Like you wanna get out like 2/3 of it, and then hold 30% of it. That way you feel like you're being part of it. But some of the stocks that you're holding, like for me, I'm holding full on FedEx because I actually got long FedEx at the lows. I'm still holding Disney full. I'm still holding Berkshire in full because Berkshire's been lagging this whole time. Finally making a move last couple of weeks. Holding full MasterCard and Visa. And bank stocks also I'm holding full. That's how you manage your portfolio. And I'm trying my best to explain in a limited time that we have here. Obviously, it's going to take. It's just something that I've established, my trading system and investing system over the last over 10 years, and I do my best to educate and inform you guys, and in these videos, especially on the weekend video, and so instead of trying to call top or bottom, that's how you manage your risk. You know what I mean? And then at the same time, you have a lot of cash reserved so that you will prepare to accumulate more on the next pullback. But guess what? When the next pullback comes, market is going to do something it always does on every pullback. Just remember, if you're scared in June, on the next pullback, something is going to happen, make you very, very scared to buy that dip. Extremely difficult. And I think this time is going to be even more difficult. I think on the next pullback, either it's going to be a pullback or consolidation or sideways. It's gonna make things a bit difficult because we did such a great move, and I think a lot of people are just dying to deploy their money, buy the dip. You know what I mean? And so market's gonna make sure market's gonna make sure that it becomes very, very hectic. And market is just way of doing it. Just always fooling the majority before it makes a move. Hopefully this presentation has been good information for you guys. And I'm doing these videos for my core followers who's been following me for a while, and I appreciate interactions and your follows, your likes, and comments and things like that. I do read all my comments. I may not reply every single one of them, but so you guys enjoy your weekend. Come back to you guys next week. We'll go from there. Good luck trading next week.